What's going on, YouTube? Stocks by the numbers. As per request, wanted to jump into another company that someone asked me about. We'll take a minute. We'll look at it. Name of the company in question, Desktop Metal, ticker symbol DM, listed here on the New York Stock Exchange. Stock right now, $2.12, relatively flat on the day here. As you see from our pop here, going back to 2021, you can see from the highs that I drew our trend line here, and we have our lows. And, you could say this is a descending wedge or a, descending triangle. We could potentially have our breakout. If we circle here, we can see this is our apex right here, which will bring us to the tail end of 2023 before we have a pop. But again, this is why I talk about if the fundamentals and the actual business, the numbers, do not support the technical pattern, then what's going to happen is you're going to have a pop up to 2.5. Everyone's going to think it's going to the moon, and then it's going to pull back into this range and continue to sell down dollar sub dollar. Reason being, again, when it breaks up and stays or breaks up and continues, it is because the numbers were there to support it. And basically what we're seeing here is an inconsistent company, even though I do kind of like the space they're in, and I do feel it can be huge, right? This company, just to let you know, says electronic technology, computer peripherals. What they do is they're in the 3D printing sector, and basically they make the machines, and they also make pieces and parts. If you go to their website, they talk about using iron, copper, all different types of metals, sand, ceramics, and stuff. So they're basically using, all different types of materials and can essentially make almost anything that you would need. I think it said their first two machines came out 2017, next two came out 2019. And they received funding from, I remember seeing Google Ventures and BMW, maybe it was another auto maker as well. But so this company, when they came out, there was definitely hype behind the 3D printing industry because you can basically make anything you need, any part you would need. You wouldn't need to contact a manufacturer or anything like that, and you can essentially build anything you want, right? You're limited only to your creativity and your imagination. So a lot of people jumped on board this sector. The problem is, just as everyone said, it cost an arm and a leg when it first came out, and just like anything else, it was going to take several years for them to get the cost down, make it a little bit more mainstream, a little bit more commercialized, to where the average person could say, oh, I'll just buy one of these machines, or I'll go to someone with one of these machines and have them make it for me. It'll be cheaper that way. And that's kind of what we're seeing here. If we look at the earnings here, you can see last quarter the company actually came in with some decent numbers here, coming in over 10% on the revenue side with a nice beat on the EPS side. But if you look at the quarter before, you had a miss on the top and bottom lines. And if you look at the quarter before, you had a beat on the top and bottom lines. And if you look at the quarter before, you almost had a miss on the top and bottom line. So what we're seeing here is the inconsistency, right? So this company brought in roughly 200 million here, as you see, lost 740 million to make that 200 million. So that's definitely nothing to get excited about. However, the EPS numbers for the last 4 quarters, even though 2 of them have been misses, they have been slowly and steadily climbing. So the company does seem to be doing some things right here. It says they're losing $2.35 a share, market cap 675 million. Again, they made 200 million, so they're trading almost 3.5 times yearly revenue, and they're losing $3 for every dollar that they're making. So what that means is it will most likely hit the top of this range, and it should pull back to about half of where it's currently trading now. In my opinion, that would be justified. But again, that's just in the short term. Even if we switch over here quarterly, you can see how sporadic the revenue comes in. And apparently, minus this quarter here, for 2 of these last 4 quarters, the 2 quarters that they broke 50 million in revenue, apparently it cost several hundred million just to do that. So this company really needs to get its losses in check, but continue to climb its revenue. And we're seeing this a lot with a lot of newer companies, but you have to do what you have to do. And here in 2022, you can see they came in a little bit above estimates on the losses for 22. However, going into 2025, this company is still EPS negative. And with revenues here slightly surpassing estimates here of 203 million, company posted 209, you can see moving forward, look at this, 237, 277, 325. So in the next 2.5, 3 years, they're only anticipating a 50% rise in revenue, going from the low 200 million to low 300 million, and the company will still be EPS negative. So hypothetically, if this company lowered all its costs, became a little bit more profitable, and was actually bringing in $300 million and change, then maybe you can say this $680-700 million market cap would actually be justified. However, right now, I do think it's a little overinflated, and I'm not really bashing the company because all they need to show us is consistency. That's really all they need to show us. But if we look here at the numbers, you can see the cash flow is negative overall. If we switch over here to the balance sheet, I mean, we had a very nice jump here on the assets for the company, almost $1.5 billion in assets there in 2021. Moving to 2022, essentially almost got cut in half. But holding $800 million in assets with only a couple of $100 million in liabilities, at least the assets are outweighing the liabilities. The liabilities did make a jump here, sitting at $280 million. However, over $500 million in equity. That's why I can understand the company maintaining like a $500-600 million market cap also. But, you know, the debt took a little bit of a jump, nothing crazy, and book value here it's showing $1.66. So that's why I'm saying we can easily drop 25-30% from this level, and it would be 100% justified. But if we look here at the actual income statement, this is where you see what the problem is. Because as you see, again, revenue making great jumps here year over year, going from tens of millions to hundreds of millions. I mean, you know, that's exactly what you want to see. So this company really is kicking ass right now. However, look at the cost of goods sold. Essentially the same as the revenue that's brought in. Look at the gross profit, only $15 million off of this money. Now, look at the operating expenses. $240+ million for that year off that number. And that's where they get this figure, the operating income. Right? That is the gross profit minus the operating expenses is your operating income. So the income to operate is almost minus $250 million. So that's why I'm saying this company losing $2.5, $3 for every dollar that they make is never a recipe for disaster. However, it's going to take them a little bit of time. 1.28 times book value, not the lowest it's been, but definitely wouldn't use it as an indicator. The return on assets, equity, invested capital, we kind of looked at before. Those were trending negative. However, you can see, look at the gross margin. Was 8%, dropped down flat, and now exploded to 13.7% on the gross margin. So that's heading in the right direction, along with the operating margin percentage was minus several hundred percentage points. Now it's only minus 70 percentage points. The EBITDA, once again, earnings before interest, taxes, depreciation, amortization, basically halved from minus 80+%. Now it's minus 48%. And the net margin percentage we looked at before, losing, again, about $3. Right now it's saying about $5. But only time will tell. We're looking annually also, not quarterly. So that's why those numbers may seem a little bit more extreme. However, if we look here at the forecast, this is what bothers me, right? 200 million. I'm glad they came in a few million above these estimates, but 237, 277, 325. So in 2.5-3 years from now, they're only expecting a 50% rise in revenue, going from 200 million to 300 million, and they're still going to be negative. They're still going to be operating at a loss. So, you know, that's what I mean. If you're telling me years from now revenue is going to jump 100 million, and you know, losses may narrow, but they're still going to be net income negative off 300 million, and right now the company's worth, you know, like 700 million. You know, that's what I mean. We can fast forward 3 years from now to 2025, 2026, and this company could essentially be almost the same price. However, in the short term, I do feel that traders are going to pump it up out of this pattern and potentially take it somewhere. And as you see, look, services tripled, obviously, because more people are using their systems. And from 21 to 22, 3D printing system revenue basically almost doubled, going from 106 million to 190 million. So the company is trending in the right direction. What we need here is consistency. They're posting in May, and then right here in August, right, 3 months later, is probably going to be around the next quarterly report. So that's why I'm saying they're probably going to bring it down in anticipation of the history of earnings, right? One good, one bad. So they're probably going to bring it down going into here, but then it's really going to be here. It is going to be towards the end of the summer. If this company starts being more consistent and really gets those losses in check, then we can not only see a breakout from the pattern, but you're going to see stability and more growth based on strong fundamental numbers. Switching over here to stock charts, there's really nothing going on. On the daily, you can see some tightening here. A lot of rejection off this 200-day moving average here, holding this mid-Bollinger Band. But this next drop here to the 50-day moving average of $1.92, in my opinion, is going to be the next stop. RSI 50 not showing us anything. MACD does look like it's sliding down a little bit, so we may continue to pull back here. On the weekly, RSI 50 not telling us anything. We do have a 200-day moving average established now at 860, but obviously it's relatively higher than where we are here. As you can see, the stock recently hit the top Bollinger Band and broke above the 50-day moving average and immediately rejected. And going back throughout history here over the last about 2 years, you can see big rejections off of the moving average. And again, here, the mid-Bollinger Band rejection. One break and then immediately pulled back, fought to get above that resistance, but of course broke down. And this action you're seeing here was last quarter's earnings. So that's why I'm saying this company has to begin to be more consistent with these earnings numbers. And that's basically what we're talking about. So you need the fundamentals to back up the technicals. Even though we may potentially have a bullish pattern setting up here, you don't want to see it pop up to mid twos, make a couple of bucks, and then pull back into the range. You want it to break out and get involved. And honestly, I'd rather wait 5 or 6 months, let them bring in consistent numbers, let it pop up to $2.50, $3, because at least I'll know if I'm buying it at $3, it's worth $3, and it's probably going to $4, $4.50, as opposed to inconsistent numbers still, and then it pops up to $2.50 and then pulls back to $1. That's the last thing you want to see. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Thumbs up helps out the algorithm. Like the video, please. Subscribe to the channel. Means a lot to me. But moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're uncertain. So I want to wish everyone success. Hope everyone makes a couple of dollars. Thanks for stopping by. See you guys in the next video.